Welcome to another moment with Spilling the Tea on Real Estate. I am Victoria Garay.
And I am Lana Riling, and we are both licensed real estate agents. Welcome, welcome, welcome. We just always want to keep you guys informed. So we are giving you here right now the new information about the FHA loan. I'm sorry, guys. I'm sleepy today.
Yes, we've been getting a lot of questions. And it's very new information. So we just want to bring it to you here so that we can, give you information up front and then allow you that time to ask more questions.
Yeah. And the person that we have today with us is very knowledgeable in a lot of the areas of lending. And Don Meadows, he's only been doing it for like 1 year because he's so young, but I'm just kidding. He's been in probably longer than us, right? Longer than we were here, I think. No, I'm just kidding. So he is a very pioneer of this and he knows the real deal. So he's going to give us the updates. We're going to let him come in and share it with you because you don't need to hear from us. We are not the professionals in this area. So we're going to welcome Don to the show.
Hi,
hey, Don.
Hey, good morning. Good morning.
Don, do you want to tell us how many years you've really been in the business?
31 years.
Wow.
So since I'm only 28, you have been longer than me.
And I'm 32. So there you go.
That's what I said. You started at 1. You're right. Yeah. Okay.
So good morning, everybody. FHA came out with a big thing. It passed. We have a new mortgagee letter effective immediately. The mortgagee insurance, the finance throughout the life of the loan insurance for FHA is no longer 85 bips or basis points. It is 55. What a lot of folks forgot that before Obama left office in 2016, January 2016, he did this originally. And then when the new administration came in, they pushed it back to 85. So this was done. This is the second time this happened in the past, 6 years now, 6, 7 years. So effective immediately, you're in an FHA loan as of right now today. The mortgage insurance that's financed throughout the life of the loan is 55 basis points. So look at it like $55 for every $100,000.
Okay.
And that's your PMI?
That is your finance PMI.
And so PMI stands for, just so people that know that
private
in the business,
mortgage insurance. It's an insurance premium that lenders, and in this case, the federal government takes out. And FHA loans they have 2 private mortgage insurance. They have an upfront mortgage insurance premium that is 1.75% of the total loan amount. So you're putting down 3.5% on an FHA loan, but you'll notice the numbers don't match. You're like, wait a minute. So a $100,000 loan, you should be financing $96,500. That's 3.5% of $100,000. Makes sense, right? Easy math. But the reality of it is most people add the upfront insurance because they don't want to pay it. Because it's 1.75%. So in a $100,000 loan, that's $1,750. Mm-hmm. So what they do, to keep it simple, versus financing $96,500 on a $100,000 loan, we finance $98,250. We add the $1,750 to the $96,50. which gives us a final loan amount of $98,250 on an FHA loan. Then they calculate the mortgage insurance. And since you're not putting down greater than 10%, it is financed throughout the life of the loan. It never goes away. So
Okay.
FHAs have the lowest interest rates, but they have mortgage insurance that lasts for the life of the loan.
Okay, can you explain to how you just said it doesn't go away? Because I still have questions from people who say, I was told it would go away after a certain amount of time or a certain equity. And I know there's been changes over the years. So you can
In
just
2015, they changed the mortgagee information that FHA, from going into the future, the insurance would last well past that 78% of equity mark. Before, once you got a position where you had 78% equity, or I'm sorry, you reduced it to 78%. You borrowed 100,000, now you owe 78,000. They would eliminate the mortgage insurance. They no longer do that. Now that was an old FHA rule. They've changed it. It's been that way for the past at least 7 years. So now FHA loans, the mortgage insurance lasts for the life of the loan.
So the most recent change, it lasts for the whole loan, but the most recent change is the amount has come down.
Correct. It went from 85 bips to 55 bips. Basis
so points. Are you seeing that people are able to buy more home with that or lower payments?
It matters. When you have a low to moderate household and we're trying to make sure the credit card balances are low and getting the car payments less than 10 payments, it can make a huge difference. You got a $200,000 loan, we go from having $150 worth of mortgage insurance to $110. So it matters. We're moving. It's actually making a difference for some folks in reference to qualifications.
Oh, that's great. So a little easier to qualify, but you're still paying it for the life of the loan. So with conventional loans, they are able to stop paying the PMI at what point?
When they reach that 70, they've gotten to reduce it down to 79% of what they owe. It'll stop. It usually takes about 11 and a half years.
Okay. And then do people, when they're in a mortgage, I actually wanted to know this myself. When they're in a mortgage and that changes, right? Does the mortgage company call them and say like, oh, by the way, you're not paying PMI anymore. We're going to nicely lower your payment. Or does somebody have to call them and say, I've paid 11 years into my payment and I need to lower?
It should automatically stop.
Okay.
Because they know what the benchmark is because they're your lender. They know what your borrowing point is, and they know when you get to 78% of that amount. It should automatically stop. Because if you do a request what's called an amortization schedule, it'll show you when the last payment hits, when the EMI will stop. You can request that from your lender today.
Okay, cool.
Yeah.
So any big market information you want to tell us? Good, bad, in between?
I got some good stuff. So,
we want to hear it.
So look, Fannie Mae and Freddie Mac, that's how the industry is governed by what they do, right? So, hey.
Someone's visiting us today. She's having a little stress in her life.
So picture this. When you buy a condo, condos have what's called a pricing overlay to it. Because it's a condominium, it's a higher risk purchase. So if you were getting a conventional loan, that's just say, for example purposes only, you're at 6%. You're buying a single family home, you're at 6%, you got a 700 credit score, great. But let's say same person goes to look at a condo. There is an overlay built into pricing because it's a condo. So instead of getting 6%, you're at 6.375. Okay. On a multi-unit building versus being at 6%, you're at 6.375 or 6.5 even, because it's a built-in overlay for condominiums. Fannie Mae and Freddie Mac have removed their what's called loan level pricing adjustments. And I know it sounds fancy.
Loan level pricing
pricing adjustments. All it means is every product is going to be priced the same.
Oh,
So you won't get a higher rate because you're buying a condo. You won't get a higher rate because you're buying a multi-unit.
well, that's breaking news.
Yeah. So, but it is only benefiting low to moderate people up to 120% of the median income,
Okay.
which changes in every market. Like it's $87,000 is 100%, 120% is 125,000. So if you're below that, it's benefiting you. Your income is below that. This pricing adjustment is helping you. But if you're making $400,000, you're going to get a hit.
Okay.
Oh,
But they can afford it.
Yeah.
Versus the people that were making less money. It was backwards before. If you made less money, you were taking pricing hits. You made more money, they were giving you pricing adjustments.
Got it.
okay. We'll take it. We'll take any kind of.
Yeah, we'll take all the good news.
Yeah.
And the Federal Home Loan Bank money is available as of January 17th. We're a month and a half into it. That is $10,000 for first-time home buyers for a single family condo or a 2-unit purchase.
You said 10,000?
10,000.
That's good to know because when we lost the MMRP, 15,000.
But this is longer than the MRP, and multiple lenders have it. We have it here at Wintrust. We have it at Associated Bank. The banks have it. It's not a broker product.
Okay.
The banks have it, and they can layer it with other programs. So I'm doing one right now. The gentleman is getting $16,000 in down payment assistance. He's getting 6 from IDA and 10 from the Federal Home Loan Bank.
And what is this money called?
It's called the Federal Home Loan Bank Funds.
Federal Home Loan Bank. Okay. So
$10,000, and it's not credit score driven.
Okay, I was going to ask that. And is it up to is it also in that you can't make a certain amount?
That's correct. It's median income. So if you're a single person, it's $58,800. If it's a household of 2, it's $66,500. If it's 3 people in the house and 2 of them got a kid, now you're at $74,000. If it's 4 people, you got 2 children, it's $83,000. So the more people in the household, because they're counting household income, even if you're not on the loan, the higher it is.
Okay, got it. So they're counting their income. So if it pushed them, even if they're not on the loan and it pushes them over the 58, they can't get it?
No. If it's 2 of them in the home and one of them's not on the loan, as long as their income is below $66,000, they're fine.
Okay. That's good.
Yeah. And we're following HUD income guidelines. And it changes in every county.
Well, this is some good news.
And it's for the entire state of Illinois. It is not restricted to anywhere in Illinois. It is Indiana, Wisconsin. It's done all over the country, but we as a lender, we do it in California, Minnesota, Iowa, Illinois, Wisconsin, and Indiana.
That's great to know.
Yeah, I mean, $10,000 is forgiven after 5 years. Somebody might be able to use that. I don't know.
I think I might need to use it. I had some drama in my building this morning. I might be calling you for a loan myself. I need to get out of here. So,
okay, this is good, positive news that we need.
I'm all about the good news today. Good news. And the IDA program, the Opening Doors program, is sundowning again this Monday. Not great news, but because IDA has the 4 different programs. They have the IDA Access program, 4% down or $6,000. $6,000 cap. Yeah, IDA Access 5%, which is 5% down or a max of $7,500, but it is deferred for 30 years. If you ever sell or refinance house, you got to pay the $7,500 back. Or the $10,000 IDA Access 6, which is $10,000 or 6% with a cap of $10,000, but it's a loan at 0% interest. They keep those programs throughout the year. The Opening Doors is a 5-year, $6,000, no matter what your income. It is 5 years, $6,000 forgiven.
okay.
So they had a little.
I guess that's the one I might. That's the one I might need to look into if I decide to move from my house to another house, because The other one, I might have to put Lucy the Chihuahua on, and I would just be living in the house with her, and she makes the income.
Hey, somebody's got to make the money. But that program is shutting down this Monday.
Oh,
So that shuts down for the remainder of the year.
It may come back, but it's whether they get another batch of money to use it. Because this program is forgiven in 5 years, unlike their Access 4 program, which is forgiven in 10.
Okay.
And you get the total $6,000 with the opening doors. Nice and easy.
Okay, this is good information.
And lastly, because we started with FHA allows you to use the income-based repayment plan for your student loans. And a lot of people don't know that. So as long as it has a payment, it can be used. They will not accept a zero. Fannie Mae will accept zero for a student loan payment. FHA requires it could be $5. As long as it has a payment on it, we can use that.
So what happens right now that a lot of people are on hold because of the government, not because they didn't pay or because they put it on hold? Do they still have to call in and make stuff active and get a payment number for you?
You still have to go in and make it because it's not active, because everybody's payment's deferred. It's not active until the deferment is over, but you have an active income-based letter. So you'll go in, you will call, not go to the website. You will call and get it done. If you go to the website, it'll take you 45 to 60 days. You call, it's going to take 3 to 5 days.
Wow.
And then you're asking for an income-based repayment plan, income-driven, income-sensitive, pay as you earn, doesn't matter. As long as it's on that format and it's on that whoever your service provider's information, the lender can take it.
Wow, that's great.
This is not just a Wintrust thing. This is a requirement. Fannie Mae says you can do it. Every lender should be able to do it. Now, if they don't know they can do it, that's a different conversation. Send it to me. We know we can do it.
Yes.
That's why we recommend certain people that
So we know that Don knows the information.
Right. So we've had a customer with $300,000 worth of student loans, and she had an income-based repayment plan of $54, and that's what we use.
That's great.
So you still can buy a home. Do not listen to the news. It is not gloom and doom. We were actually at a higher interest rate in this time in 2018.
Thank you. I feel like we should have started out with that conversation.
Yeah.
Because people are so stuck on this interest rate, and our grandparents and parents and somebody else bought houses way higher.
Yeah. Look, my first house in 1992, I bought a house and my rate was 11%.
Oof.
But it was great. I owned my own house. It was still cheaper than my rent. Because what is the interest rate on your rent right now?
Right.
Exactly. Don't know, do you? It's a variable and it keeps moving. It's not fixed.
And also, it's not giving you any write-offs for your taxes.
And it does not build generational wealth.
Absolutely.
That's the foundation of everybody starting something, having something, is owning something. So we are trying to increase home ownership in the community. The African-American community is lagging. We actually decreased our home ownership last year. We have been trailing since the foreclosure crisis of 2018. It has not increased for us. So we'd like to be able to increase that. And you do that by education. And paying rent is not helping you in any way. Stop making your landlord rich still works for me, even though I'm a landlord. Anyway.
Me too. I don't mind it. But I do want them to move on and get their own. I do want them
to move out. Get your own. Help yourself out. And even at 7% interest on an FHA loan, you still can afford a single family home up to $200,000, and payment would only be $1,250.
Yeah, I don't think people get the numbers.
It's just, and we only look at the numbers. We're not looking at the dollar amount in a house. Taxes and insurance affect what you can do, but with lower mortgage insurance on FHA, you got to make it make a difference. Become a homeowner. Don't be afraid.
Yes. Well, this was also great. Thank you for taking some time with us today. I know you need to get back to your Wintrust life.
Yeah, I gotta get back to the life that pays me.
Yes. So we will see you soon. We thank you for all your jewels today of information.
So, ladies, I got a thing we do. So, you have three things that happen on a weekly basis, right? And I remind people of this. You have a bud, which is the beginning of something great. You have a thorn because something might have happened that, didn't move the way you wanted it to move. And you've got a rose, something that you really enjoyed that happened this week. So, what is your bud, your thorn, and your rose? My bud is I'm a keynote speaker on the IMBA, Illinois Mortgage Bankers Association, on March 8th, starting at 11 o'clock. We're going to be talking about the state of housing and the minority communities. That's my bud.
Oh, that's great.
My thorn is I wasn't able to help somebody because their spouse that they're separated from went into foreclosure. And she has an 800 credit score, $100,000 in the bank, and she can't buy because her spouse that she's separated from had a foreclosure on his house.
Oh, wow.
And my rose is I closed on somebody as a first-time home buyer, and the man was able to buy a house for his children, and they never owned. No one in their family has ever owned a house.
Wow.
That's a rose for me. My bud, my thorn, and my rose. So you don't have to have one today. I'll put you in a spot. The next time you talk to somebody, ask them, where are they? What's your bud? What's your thorn? And what's your rose?
I
love that. I'm thinking of a few thorns, but I kind of having a hard time with my bud.
Over here, okay?
Your buds are going to be your opportunities.
I know. I need to get out in these streets and get some opportunities.
Get out these streets, get your opportunities out there.
Yeah.
And then your rose is what you do. What you're doing is your rose. You're helping people make dreams come true. That's your rose.
Now that, and Victoria's working on a rose.
See, that's it.
She's having some thorns along the way, but I think
that's what happens. You cannot climb a smooth surface. You got to have something to grab onto. So,
well, thank you and good luck with your 11 o'clock.
Yes, thank you. We'll be talking soon, I'm sure, with all this.
Yes, we will. Thanks, ladies.
Okay, have a great day.
You too.
Bye-bye.
Bye-bye.
Wait. Victoria, where is everyone going? Is everyone leaving?
Yes, Lana. The show's over.
But wait, I have more to say. Is my mic still on? Can they hear me? What if they have more questions?
Well, they can always contact us.
How? How will they reach us after this show?
If you have any questions, our contact information is on the screen. Otherwise, we'll see you again in a couple weeks.